Today, we're diving deep into hodling. With more investors committed to holding their Bitcoin long-term and refusing to sell, I'll break down the key HODL metrics that reveal what this means for Bitcoin's price trajectory in the months and years ahead. First up, let's check out the power of hodling with our positive HODL days indicator. This basically shows us how many days in Bitcoin's history would have been profitable if you had bought on that day and just held until today. It looks back over the entire price history and counts how often the price back then was lower than it is right now. What you get is a percentage, the number of positive HODL days. The higher this number, the more often Bitcoin's current price beats its past prices, meaning long-term holders would mostly be in profit. It's a quick way to gauge Bitcoin's long-term strength and how often simply hodling would have paid off historically. Think of it as a performance check for patient investors. Right now, it's reading over 99%, which means Bitcoin's current price is higher than almost every single day in its past. That's a strong signal of long-term market strength and shows just how favorable things are for anyone who's been hodling patiently. Next up, let's dive into the popular one-year HODL Waves. This metric shows us the percentage of Bitcoin's supply that has stayed inactive for at least a year. In other words, coins that haven't moved in over 12 months. It's a solid way to gauge long-term holder confidence and how much of the market is being patiently hodled rather than traded or sold. I've smoothed it out over a week to avoid any short-term noise. You can see it's color-coded using shades of orange, where lighter colors mean more coins are held long-term, and darker colors mean fewer. Right now, the indicator is reading around 62%, which tells us that about 62% of Bitcoin's supply hasn't moved in over a year. This level suggests a decent amount of long-term holding, but also that a significant portion is still active or circulating, which can mean there's some trading and potential volatility in play. We can really see how smart the long-term holders are, as they tend to sell into the rallies at major cycle peaks. And while we've seen some selling into the rallies of this bull run, it hasn't followed the typical U-shaped distribution pattern we saw in previous cycles. That just shows how different this cycle has been, with price climbing more in a step-ladder fashion instead of sharp swings. Even though we observe these familiar patterns of accumulation and distribution by long-term holders, one fact remains true throughout Bitcoin's history. More and more people are choosing to hodl and not sell over time. We can actually see this in how this indicator trends upward over the long run, despite the profit-taking that happens at cycle peaks. Overall, this metric is one to always keep on your radar, as it gives us a clear window into the behavior of long-term holders versus active traders, helping us understand the market's underlying strength and potential shifts in sentiment. Now that we've covered the one-year HODL waves, let's take it a step further with its realized cap counterpart. This metric breaks down Bitcoin supply into different age bands, basically groups of coins based on how long they've been held since they last moved. But it adds an important twist. Instead of just counting coins, it looks at the realized cost basis, which is the price at which those coins were last bought or transferred. What this means is that when you see big waves in the younger age bands, represented by warm reds and oranges, it shows a surge of new coins bought at higher prices, which is classic FOMO territory. These peaks often happen near market tops, so they're great signals for market froth. On the other hand, when the older age bands in the cool blues and greens dominate, it tells us most holders are sitting tight and selling pressure is low. That's usually a sign of market bottoms and the perfect time to start accumulating. So, the realized cap HODL waves are a smart way to track how holder conviction shifts between FOMO-driven buying and steady accumulation, helping us time those critical tops and bottoms more confidently. So, building on these HODL waves, let's take it a step further with my HODL Momentum metric. While the HODL waves provide a snapshot of long-term holding supply at a point in time, this metric measures the momentum behind that holding behavior. It captures how the strength of long-term holding is accelerating or weakening over time. A reading above 80 signals strong, possibly overextended momentum in long-term selling, where holders are moving or offloading more coins. We've seen this twice this cycle during rallies to 70,000 and 100,000. Conversely, readings below 20 indicate increasing hodler strength, where more coins are deciding to stay put for the long haul. Right now, this metric has cooled significantly from the recent rally, retesting the midline at 50, and appears to be trending back up, suggesting long-term holders may be gearing up to distribute into the next rally. Put simply, this metric dynamically tracks not just how much Bitcoin is held long-term, but how strongly holders feel about holding versus selling, giving us sharper insight into market psychology and potential turning points beyond what raw supply data alone can reveal. Finally, while all the previous indicators rely on purely on-chain data, we'll now take a slightly different angle and look at one of my favorite new indicators, the HODL Field. This adds a technical dimension by analyzing Bitcoin's normalized deviation of daily returns relative to their long-term distribution. Put simply, it essentially provides us with a continuous oscillator that reflects market momentum and hodler conviction dynamics. From a hodling perspective, it acts as a proxy for how much long-term holders are influencing price through their buying or selling behavior. Elevated readings, especially above 80, have historically marked major cycle tops, signaling overextended returns, heightened selling pressure, and weakening hodler conviction. Conversely, lower values, like the current reading of 29, indicate subdued volatility and consolidation phases, where accumulation dominates and hodler conviction grows stronger. These low points often align with local bottoms or accumulation zones, where selling pressure eases and holders regain control. Technically, the HODL field is a dynamic gauge of hodler-driven market extremes. It complements supply-based metrics like the HODL Waves, enriching our toolkit for spotting turning points driven by long-term holder psychology. So, right now the data feels pretty clear. We're in a phase of calm consolidation and growing hodler strength, which should set the stage for the next potential rally as long-term holders prepare to take control again. So, to wrap things up, the big takeaway here is just how powerful patience really is in the Bitcoin market. When you look at the positive HODL days, it's crazy to see that over 99% of all days in Bitcoin's history would have been profitable for someone who just bought and held. That really highlights how much long-term holding has paid off historically, and why staying the course matters more than ever. Then, when we dive into the HODL waves, we get a clear picture of market cycles through the age of coins being moved. Seeing those younger coins light up in warm colors tells us when FOMO is at its peak, usually right before a major top. Meanwhile, when the older coins dominate, it's a sign that strong hands are holding tight, and that's typically the sweet spot for accumulating during market lows. It's like having a pulse on who's in control, whether it's the traders or the true believers. And finally, our momentum indicators take things a step further by showing us the strength behind those holding patterns. They don't just tell us how many coins are held long-term, but whether holders are starting to get jittery and sell, or doubling down and holding even stronger. This adds an important layer of insight that can help spot potential turning points in the market that raw supply data might miss. All in all, combining these metrics gives us a much clearer window into Bitcoin's price dynamics, especially how the behavior of long-term holders shapes the market ahead. It's a powerful toolkit for anyone serious about understanding and navigating the cycles of Bitcoin through the lens of the market's strongest participants. If you're serious about Bitcoin analysis, my full custom indicator suite is now live, built for investors looking to gain an edge through deep cycle signals and advanced on-chain insights. It's available now through the link in the description, where you'll also find my free newsletter. And if you found this valuable, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. And I'll see you all in the next one.